Good morning, all. Welcome back to the weekly video again. So, as usual, STI, we are going to look at the bigger picture, the macro, and then we're going to zoom in into individual stocks to look at this performance of the stocks. So today I will be doing something different, and hope you like it. If you have any things to feedback to me, feel free to WhatsApp me for those have my contacts. Okay, so now STI, back to STI here. As you can see, all my drawings are still here. My last week analysis was, if you see the resistance breakout at 3225 convincingly, then we are looking at the projection level towards 3288, or rather going back towards its resistance at 3288. And I did mention that if the breakout is not successful and it consolidate again, of course, breaking down, you see my drawing here, breaking down to hit this level and rebound is possible. And today we see the first rebound, but whether we will continue where I've drawn, well, that remains to be seen. STI still can run a risk where if we fail on this rebound, it consolidate at this low and then breaks down. Now, we must all understand the macro environment, which I have been doing diligently in the email. Just in case you haven't noticed, well, I'd like to bring your attention to those who receive my email every day. Okay, and maybe I just bring this up, blow this up. Well, there are people who tend to have selective reading. Okay, I'm not sure why is it so lah. Why? Because why do I bring this up? Because there are people who calls me and say that, hey, Zhongliang, you should read at the macro view, right? Look at the big Hongguan, in Chinese called Hongguan, big macro view, at least a bigger picture. Cannot just look at indicators and just analyze as it is. So I wonder, this person who tell me this noticed that in my email I don't even put in any indicators. Okay, and I'm just looking at whether the trend can continues or not. So if you look at this comfort Delgro, well, it's just purely uptrend line, support, resistance, and then where it can go if it can break out 130. Okay, my apologies if you find that I'm too naggy in terms of feeding back what people tells me, but I just want to bring this up a little bit. Okay, just in case if you don't know, I have been talking about index. Index is always the bigger picture, the macro environment about stocks trading. Okay, so the index will be affected by mainly the news, where we are looking at the interest rate, closely monitoring the interest rate nowadays. And then we are looking at the job data, because the job data will directly impact the interest rate decision. Okay, and of course, next will be the inflation data. Okay, so the inflation, this is how it runs. Okay, so if the job data shows that now the number of jobs are going down, so meaning to say there are more people potentially getting unemployed. Okay, and then this is where it will lead to lesser spending. So when there's lesser spending, lesser demand, the prices will come down. Like, for example, rental. Nobody want to rent the units anymore. Then what would the landlord do? The landlord will remove the high price and then reduce it to bring it to lower price. Okay, so this will bring the inflation down, and this is what the Fed is trying to do. The Fed is trying to keep the interest rate high, so that a lot of company faces higher expenses, therefore cut down on expenses. And manpower is the highest expenses in every company. So this is one of the highest, if I'm not wrong. Okay, so this is how the inflation is going to be controlled. So if the job data is down, lesser people spend money in the markets, inflation is going to go down. So like oil price recently, it went up because of the supply cut by Saudi and Russian, but the demand has also dropped. So which also can lead to oil price comes down as well. So if there's no demand, or demand couldn't keep up. Pumping more supply would just lead to price erosion. So that's why the Saudi and Russian decided to cut. This is how the economics works. So this is where I would strongly encourage you, if you receive the email, to read through, right, see where the chart is going, and then decide on each an individual counter, right, whether the counter that I highlighted, will it go up or go down? It depends on various conditions as well. Like for example, ComfortDelGro has to break above 130, right, in order to continue to move higher. Now, breaking up is just the first step. Continue to move up still depends on the macro environment. So in this situation, what would I do is, normally I would not go full force. Say I'm trading and then I think that the market is shaky, I will probably go in half the amount that I would prepare to go in normally in a bull market. Like say bull market, I will buy 30,000 worth of stocks each time. And then now this is not a very clear market, seems shaky because the index chart is going sideways or going down. Then probably I will go for 10,000 worth. And then when it hits certain profit target level, I will take, not trying to ride and hold for a long, big profit or huge gain. Why? Because the market is not clear. Protecting profit is more important. But once the market turns bullish, right, this is where, by all means, hold as long as you like, because this is where you are going to see multiple fold of profits coming in, because the stocks tend to continue go higher, right? So this is what I would like you to take note. So if the bigger picture, like for example, STI couldn't make use of this rebound. So just in case if you don't know, the job private payroll went down last night. That's why the market rebounded. And if this rebound is not sustainable, because tomorrow there's a non-farm payroll, and this non-farm payroll is going to affect the market again. And if this number is ugly, which means that it is not to the market's liking. So the market wants a non-farm payroll to go down so that interest rate can come down. Then they can prepare for recovery. But then if non-farm payroll increases again, which means that the economy is still strong, the Fed can still can afford to continue to increase the interest rate, then of course stock price is going to come down. So therefore, this is what you need to take note, where it may drop down towards this level. Okay, and then if the upcoming numbers are not so good, right? After non-farm payroll will be CPI. Okay, if all these numbers are good, then you can see STI rebound strongly, fill up the gap over here, go back to 3225, breakout as I drawn previously, and of course 3288 may be tested again. Okay, so back to the email. So you can see, as usual, the emails I highlighted quite a number of stocks, and feel free to WhatsApp me if you are interested of any one of these stocks. Yeah, and I mentioned a few stocks here. All these stocks did not perform well, as you know, because the broad market is not doing well. So I'll just pick Sembcorp Industry as an example, as people are really interested in Sembcorp. A lot of people are really interested in Sembcorp Industry because of its movement, right? It moves up and down pretty fast, and this is why people like it. No, starting from this point, when I was looking at the chart here, okay, as you can see, Sembcorp Industry at this point, right, had rebounded from its major support. Okay, so instead of just thinking of the negative point, I would encourage more positive analysis. Why? Because if you see this stocks rebounding from its major support, and it is consolidating here. What do I mean by consolidating? Now it is trading in a range. So when the stocks don't move up nor down, and it's trading in a range where it touched 516 and rebound to 525, touch 516, rebound to 525 for a few days. So this is called consolidation. Now, what you will expect next is that if this is a positive consolidation, it should break up. Okay, it should break up. Right? So it should break up and continue to move higher towards the resistance at 565 if it's a positive consolidation. But if it doesn't break up, so it means that there isn't any action to be done in action, because the next working day or trading day, it came down. So any traders should know that you should continue to watch, not taking any action. Now, if you are already holding this counter, of course, well, you will feel bad, but this is not a life and death situation. If you really think that every time the stock price drop is a life and death situation, then you got to think positively, because first of all, what is your trading target? The Sengkang industry, it may go down, but would it recover if the businesses is still doing well? Well, there is a high chance that the stock price will recover when the businesses is still continuing to do well. So I would think that either you can cut first if you find that the stock price is weak, and then you want to wait for lower price to buy, or you would want to continue to watch until it confirms that you should cut. So like for example, it went down, right, and retest the support level. So at this support level, it seems to be very strong. So your first train of thought would be, okay, since support is holding well, let's look for signs that it could rebound from the support level. Okay, so what are the confirmation signs? You are looking at signs like this. Okay, so you can see it went down to test support level for a few days. Remember last week I mentioned that if you keep testing support level, right, it may not be very good as well. Okay, because it is telling us that it wants to stick to this low, and of course vice versa, if it keep testing resistance level, right, it means that the resistance level, right, can be sticky, and of course, right, either way, whether it keep testing up or down, we need to wait for the breakout, as I concluded. Okay, so what you want to see is that if you see this sign that it rebound, means that it successfully bounced off from the support level and it is not sticking to the support anymore. So which this is a positive sign, and nobody in this world, or in any gurus in this in this world would tells you that, hey, this is a bearish sign and the stocks will go down. Nobody can tell you that, okay, unless they got a confirmation, because nobody in the right frame of mind would judge that a white candle rebound, right, is a bearish omen or bearish sign, right, until of course they see this, wow, such a long black candle out of the blue, because the day before it was still running up strongly and nicely, until suddenly it just opened lower and then just goes down and breaks below support. Now at this point, then I would say that, okay, this is a descending triangle, and we are facing some downward pressure, okay, as the email also explained that. Okay, so this is a descending triangle. We are facing some downward pressure, and we can now duly do some projection. Okay, so we can do some projection and project that Sengkang industry is going to go for about 476 or 4. I projected about 481. Okay, yep. So thereabouts 477. Okay, so you went there. So now we see that the stocks from this level rebounded strongly, and we close at the 485. So we claim this level. So the next thing that we'll be observing is that if this is so, this forms a hammer candle pattern. And what we need is a follow-through buying the next day, which is today. Okay, today we need a white candle close solidly at this 490 at least, to confirm that it can go up to go back to this resistance level, which is around 505, 501, that thereabout. Okay, so from there, if it can break out, then you can see a change of trend, right? Especially it needs to go to 521. But unfortunately now, as you can see, early morning it was a white candle. Now 10:14 a.m. It turns to be a black candle. So meaning to say there is a risk that this hammer may fail. And if this hammer fail, Now you can see here, there is a support, okay, that was created in May this year. And it was holding very well at this level at 479. If it breaks down, right, if the stocks breaks down this 479, then we can see more downward movement. Okay, so don't just take people's analysis projection as a view of a penalty that or sentences that these stocks will goes on. Anything will change. So it really depends. Now the market, although we see a strong rebound from the US market last night, but then they will still be shaky a bit because tomorrow there's non-farm payroll and nobody knows what's going to happen. So if there's more certainty comes around, then we can see market recover higher towards this November rally where FOMC happens on the 3rd October to 1st November. And if the speech from Powell is less hawkish, then we can see more rally in November. Okay. Now, same for the counter here, AEM, which I highlighted in the email also. So I do encourage some reading of the email. So like for example, AEM. Okay, I mentioned that the counter is trading halfway between its resistance and support. So we see some positive action from MACD. Okay, so this is a great sign, but do take note, this is a black candle. Okay, then the trading idea is that if it breaks above 346, then it's a bullish opportunity, while 337 will be the exit level if the breakout fail. So first of all, we got to ask ourselves this question: did AEM break out from the 346 resistance? Okay, so if there isn't any, okay, then of course no action. Now the counter has pulled back from there since posted, all right, and now it's forming a one white soldier. And if it can close at 339, then one white soldier confirmed. But again, follow through buying. The follow through buying so far has been weak, like I mentioned, because the market is nervy, waiting for more data, non-farm payroll, CPI. Then if these are more fixed, then the earnings data coming up, because this is a new quarter now, there'll be earnings like you know the Keppel Corp, Suncorp Industry, they're going to come up with their results, how they fared the last quarter, and if this are favorable, then the share price will rebound. So on and so forth. So here we can see that AEM has a chance to go back up to 346 resistance and then break out from 346, then hit 359 if everything shows positive sign. Next will be iFast, which is highlighted today. So iFast, you can see the trend line above here. So it has to clear this. It is a psychological level where if it doesn't clear this uptrend line again, then it will be tough for it to continue higher. Okay, so same as when it breaks down this uptrend line, it is a sign that you will go down lower. Okay, so do take note. Comfort Delgro. So you can see Comfort Delgro is consolidating here, and it is turning it is a good consolidation because it's going sideways. The longer it consolidated here, right, probably we can see more clearer action going forward because it will definitely break out. But break which direction? That one we got to watch. So we got to watch whether it breaks 130 or if it breaks 127. So if it breaks down 127, then it can go down lower. But the positive signs are still ahead because, like for example, the fare is going up, right? And if oil price comes down, then it will lower their cost further. Then the share price will be more lesser barrier to go up. Okay, so thank you for viewing this video. Thank you for all the likes, and I would like to see you next week. Bye bye.